Ever wonder where ETFs come from or they're created? What if I could tell you you could invest in the top 500 companies while aiming to also generate a monthly passive income off of the S&P 500? Well, let me introduce you to Garrett Powell.
Hi, how are you?
He's been designing ETFs for 12 years and has pioneered building some of the largest options-based ETFs in the market, which offer to aim 10 to 12% passive income year over year. They're also very tax efficient compared to mutual funds and managing them on your own accounts. We're going to get to generating passive income in a minute off of the S&P 500. But first, Garrett, what drew you to designing ETFs? How'd you get into this?
Sure. Thanks, Karen. Appreciate you having me on. Looking at ETFs, they're the most tax efficient investment vehicle out there, and there also tends to be the lowest cost and also have the highest liquidity. So when we look to create investment-based strategies, we always want to offer for end investors the lowest cost-efficient way of getting exposure, the most tax efficiency, and also having the deepest amount of liquidity.
Okay, so you're telling me off camera that you guys generate roughly 10 to 12%, or you aim to, off of your passive incomes using options in your ETFs. And it has a lower volatility than just investing in the S&P 500. Could you quickly explain how that passive income works?
Sure. So the idea behind our products are to generate a passive monthly income. The way we do that is through a variety of different option-based strategies. On equity products, we look to give exposure to, let's just say, the S&P 500, while being able to administer a covered call strategy that would aim to lower the overall volatility of the underlying investment, but also generate the monthly current income to be able to be distributed to investors.
Okay, so you're basically just generating a passive income on top of the capital appreciation of the SPY, but you're probably not getting a total one-to-one on the SPY, right?
Yes, that's correct. So there has to be some give and take. So if we're able to generate, let's say on average, 1% a month, right, there's going to be a level of upside participation that you'll give up in order to do that. So typical allocations to these, products or utilizations for them, our clients that are looking for lower volatility, not the entire total return of the S&P 500, but to be able to generate a monthly tax efficient income to aid in their overall portfolio allocations.
Okay, so it sounds like this works pretty well during a bear market.
Yeah, so we tend to talk to a lot of investors about when and where the applications work. Covered call strategies in general work better in flat to down markets or slightly up markets, where you give up against the underlying full, equity benchmark. It would be obviously in a strong bull market where, month over month, the market's moving significantly higher and you've given up some of that upside in order to generate the income. So really flat down markets, you'll see outperformance underlying equity and slightly positive equity environments.
Okay, so you said your equity product ETF is for the passive income is SPY-I, SPYI, and the next question I know I'm going to have is, and everybody else is going to have, is with new assets coming onto the market, there's liquidity issues, and also is it fractional investing?
Sure. So fractional investing is going to be based on the underlying custody platform that any investor has. Does a Charles Schwab, a Fidelity, a TD Ameritrade, another smaller like Robinhood. Do they allow fractional shares? That's going to govern the ability to actually buy something, less than one share of our fund, which let's call averages, $45 or $50 for one share. That would be the minimum investment if you were forced to buy one share of the product. The liquidity overall, though, in SPYI that we're talking about is S&P 500 index based. So you're getting relatively the same underlying exposure that you would in SPY from a liquidity standpoint, because we own the same names and the same underlying index. So although the product might not trade nearly as much as SPY, you still have the underlying exposure, and all ETFs liquidity are actually a function of their underlying investments, not how much actually is traded on a day-to-day basis.
Okay, so you basically are kind of piggybacking off of the liquidity of the SPY as far as that stuff goes. Okay.
Correct. Yep, our underlying investments mirror that of the S&P 500, so those would have the same liquidity that the S&P does.
Okay, and then you also mentioned that they're very tax efficient. Could you explain exactly what that means? How is a ETF more or less tax efficient?
Sure. Without getting too technical, there's the ETF structure and the vehicle that is more tax efficient than you had mentioned earlier about mutual funds or in your own, your own account. That's really because of the market makers that are in the market actually actively participating in the exchange traded side of the ETF. So the ETF itself is tax efficient. And then we have a couple of levers that allow us to be tax efficient, the underlying investments. So we would use an S&P 500 index option, which would be different than a SPY ETF option. SPY ETF options are 100% short-term capital gains from any returns. Our index options get to be taxed at 60% long-term and 40% short-term. So there's a variety of different ways they're tax efficient. We can speak about that obviously more, but both in the investment product and also the investments that we make help aid in the tax efficiency.
Okay, well, thanks for clarifying that a little bit for me. For anybody that's interested in learning more about options ETFs and how they all work and stuff, I'm actually scheduling a call with Garrett. It's probably going to be somewhere between January 12th to January 22nd. We haven't confirmed the exact date yet, but if you're not a part of the Discord yet, go ahead and check the links below and join the Discord. And inside the Discord, there'll be an event tab where you'll see when we're going to be hosting this call. So if you would like to talk to Garrett specifically and ask him any questions on this stuff, it's going to be an open forum conversation. I'll probably start it out talking to him and asking questions, but I'll open it up to an open forum to discuss this. And I'm also going to have some other pretty intelligent and resourceful people on that call if you're interested in being a part of it. So other than that, thanks for giving me a quick brief on this, Garrett, and then anybody else that's going to be watching and joining the call. You have 3 products, right? You have the SPY, which is the passive income machine, basically. Then you have BNDI, right, which is similar, but it's bonds exposure. And then you also have a very short-term 3-month bond product as well. Could you go over BNDI real quick and the short-term bond?
Yeah, that's correct. BNDI has exposure to the overall U.S. Bond market. So you're getting exposure to broad-based U.S. bonds with a option strategy that tries to generate 2 to 3% of additional income. Or we have CSHI, which is our cash alternative product, and it's long 90-day treasuries plus an option strategy to seek to generate 1 to 2% of additional income there. So kind of a core equities, core bond, or a cash, which allows clients the flexibility and investors to choose what exposure suits them best.
Okay, so you're covering all the bases. You've got the equities exposure and more volatility and growth, but with the passive income and then bonds and cash. So that works really well with the algorithmic design, because a lot of times we design rotating between the different classes based on what's happening in the stock market. Okay, I don't think I have any other questions other than that. We'll cover a lot more in the call that we're going to have. Is there anything else that we might have missed or that you would want to say on this stuff?
No, just thank you for your time. Looking forward to the call and answering other questions that you or your guests or participants might have.
Okay. Awesome, Garrett. Well, thanks for jumping on here and talking with me on this stuff. Again, if you guys want to be a part of that conversation and join the call, check the Discord, and there'll be an event down there for you to join and watch. And I'll eventually probably upload this I'll record that video as well and probably upload it. All right. Thanks, Garrett.
Sounds great. Thank you.
All right.